Order blocks are one of the most important yet misunderstood ICT concepts. In this video, I'll be showing you why you're choosing the wrong order block, and I'll be simplifying what the highest probability order block looks like. I'll also be sharing with you a secret candle that 90% of you do not know, which can increase the risk to reward by crazy amounts if used correctly. So let's get straight into the video. A misconception that people have is that an order block is just one candle to the downside before the up move, or one candle to the upside before the down move. And you are wrong with this theory, right? Why? Because an order block can be consecutive candles. It doesn't have to just be one block. It can be consecutive candles, right? And I've also got a checklist for a high probability order block, but let's get into the diagrams first. As you can see, I got the movement here, and I got the candlestick analysis, candlestick example right here. So for this example, price is moving down, and as you can see, we've got a high a supply and demand area, or high time frame PD array over here, which I'll do another video on, just specifically PD arrays. However, for this example, we're going to just say it taps into a supply and demand or PD array over here. So prior to this PD array, as you can see, there's liquidity over here. So price sweeps this liquidity, right? These are the same example, by the way. So this example is the same as this. This example is the same as this. So price sweeps this liquidity and taps into the supply and demand area. However, we're not looking for trades just yet with the order block. So we're not looking for trades just yet, as there's no order block being created. Then wait for the order block to be validated. So what validates the order block? The liquidity sweep is one. Tapping into the supply demand or PD array is another. And the next one is a market structure shift. So as you can see, a market structure shift with displacement, right? So if it creates displacement, that's a valid market structure shift. You don't just want to see a market structure shift with a big wick to the upside over here and then call it a market structure shift. No, because price could reverse and go in the opposite direction. So you want to see it close above with displacement. Now, another thing is if an FVG has been created during this market structure shift, it's also even higher probability. Now, a lot of people will think, okay, after this market structure shift or after this engulfing right here, they'll think, okay, this order block's created, and they'll set limits. But it's the last down candle before the up move, and what will end up happening is price will swerve them, right? As you can see over here, price doesn't reach over here, ends up tapping into this area instead. Now, what is this area? As you can see, price's liquidity sweep, well, as this liquidity sweep was occurring, these three consecutive candles were actually the candles that made this liquidity sweep. So the high probability order block creates the liquidity sweep. After this liquidity sweep, it taps into the higher time frame area, the demand area, right? And then this causes price to break structure and shift in market structure to the upside, right? So now, instead of choosing the down candle, what you want to do is mark out all three consecutive candles as your order block. Now, if you think, okay, these three consecutive candles are going to be too big for my stop loss, right? My risk reward is going to be too low, and my stop loss is going to be too big. You can refine this by marking out 50% of the order block, which some people may call it the mean threshold. ICT calls it the mean threshold. However, it's basically just marking out 50% of this with your fib tool. So all you want to do is mark out the three consecutive candles before the up move, right? Before the market structure shift with displacement, and as a bonus, it created FVG. Another confirmation for this high probability order block is it formed in session? As you can see, for example, you can't really tell if it was formed in session. However, it's formed in like New York or London. That they're my sessions, so that'll be a high probability order block, right? And as you can see, price taps into 50% of it over here, and then moves in the opposite direction. Now for the second variation, very similar. However, the order block's slightly different. So as you can see, before the liquidity sweep, right, before the high was created, as it was sweeping liquidity, just before it swept liquidity over here, you can see that a mini liquidity was made over here and a mini market structure shift high right here. So now let's say, if you look at this example over here, so liquidity sweep happened, then we've got also a mini liquidity sweep area and a mini market structure shift area. So as you can see, liquidity was taken out here. So now if it was consecutive candles over here, we'd mark this out as the order block. For this example, we've just chosen one single candle, which is valid in this scenario. And then after sweeping this liquidity, right, for the second time, so it's done one liquidity sweep here and the second over here. Now it's moved to the upside, and has it caused a market structure shift with displacement? As you can see, yes, it has. Now it's also created FVG, and if it was created in the session time, in the kill zone time, then it's a bonus. But what you can do is you can mark this order block over here, mark out 50% of it even, enter there and put your stop loss below the low. Now what's a lower probability order block? A low probability order block is one where usually it's already trending, so if price is already running away from you and the body is not as big as, for example, this one right here. As you can see, this candle was made up 90%, well, all of it was 100% of this candle was made up of the body, and there was not really any wick in there. However, with this example, most of the candle was made up of a wick, right? And price instantly ran away from it, right? It left an FVG over here, so now we've got an FVG and an order block. I'll be going into the FVG video. I'll make an FVG video very soon, so stay tuned. However, this candle does not have a large body, right? So in this case, it's a lower probability order block. And what I do in this scenario is, because price is already running away, let's say price is running away from me like this, okay? It's already trending down. It's not really giving you any deep retracements. What you can do is mark out the lower wick of it, so the lower of it to the open for this example, because it's a bearish order block. And then you could wait for retracement to this area. And what you could also do as confluence is mark out 50% of this and then enter at 50% even deeper, so you're entering at a more premium price. Now for a bullish example, lower probability order block, it's the same. So let's say price is running away from you like this, not giving you any major retracements. What you can see over here is an order block made, okay, with a lower, less of a body, more of a wick. FVG made over here. There's not really any market structure shift because price is already running away. However, there's an FVG and there is an order block. Not much liquidity was swept. There's no liquidity swept in this example. However, there was an order block with an FVG after it. So what I do is I'd mark out the high to the open, and then I look for an entry based off that. And if you wanted to, you can refine it to 50%, right? Enter at 50%, put your stop loss below the low. However, entering at 50% is risky, as price won't always tap into 50%. Now let's get into the live market examples, because that's what matters. However, before we get into the live market examples, if you're trying to pass your funded challenge or you're looking to get funded, then this automated trading bot is for you. Most people spend $8,000 to $9,000 in the space of 4 months before they reach their first funded account. But with this bot, you can avoid this waste of time and money by letting it pass the challenge for you, 100% guaranteed. Our bot does not miss. It passes the challenge usually in a few hours and the same day. So the day after, you could be funded 6 figures, trading live, making real profits. It's a zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. Get on this whilst it's still available. Click the link in the description to get funded, and don't waste time. Okay, so we're on the 15-minute here on GBP USD, right? And as you can see quite clearly, the market is moving upwards. Price is in an uptrend. Market's moving higher, right? And this is just prior to the London session, right? So as you can see, price has broken structure over here, so the price is on a market structure shift. Before this market structure shift was any liquidity taken out, and as you can see, there was a liquidity low right here, so sell side sitting below this low. Price swept it, and then price ended up breaking the structure, breaking this market, so the market structure shift occurred with displacement. As you can see, the body closed miles above this, right? And in addition to this, FVG was created, right? So where is the order block in this example? So is it the last down candle before the up move, or is it all the consecutive candles, right? The whole thing, right? And if it is, which one do you mark out, and how do you mark it? Well, with the order block, what I like to do is I would like to mark out the bodies, because that's where the most volume is, right? Wicks are for when liquidity is being swept, and the bodies is where I like my entries being, especially for order blocks, right? And other blocks in general, other PDA blocks, I like using the bodies because that's where the most volume is. So what I'd wait for now is a tap into this order block, and you could even mark out 50%, and then look for either confirmation in this area to go higher, which I've shown in plenty of my other videos, or you could just take the buy straight away. However, I'm not here to explain the entry. I'm here to explain what a high probability order block is. So all you do is wait for the price tap into it, and if you want to mark out, you can mark out 50% right here, and let's see what price does. Okay, so as you can see, price has tapped into 50% of all this order block over here, all three consecutive candles, and as a refinement, right, which will happen at times, price will tap into the last down candle before the up move, which it did over here, and you can refine your entry. So you could maybe look for confirmation within this area and in this area in specific, and possibly take higher risk trades in this area because it's at a more discounted price, right? So price has tapped into the order block. Let's see how price moves away now. Okay, price is moving away quite nicely, and as you can see, does price make another market structure shift at this point? Yes, it does. So as you can see, price taps into this order block over here and then moved away, made another market structure shift. Now, where's the order block in this leg, right? So as you can see, we've got all these down candles right here, and there was not much liquidity swept. As you can see, there's probably just these sell side lows swept over here. However, we've also got this order block right here. Which one would be a high probability? these consecutive candles, obviously, right? Now, we can mark out 50% over here and to just wait for price to tap into the area. So you can see the market structure shift happened, there was FVG. Let's see what happens now. Okay, so the market taps into 50%, and again, in line with 50%, what's there? You can see this order block right here. Now, if you mark out these two bodies over here, you can also refine the stop loss by making 50% of this over here. You can mark out the bodies over here, or you can mark out just the candle and the low to the low of it as well. Now, I'd do this in this example. If I was trading the market live here, I'd probably mark out the order block over here and to the low. Why? Because there's a bigger wick. And what I've seen a lot in the live markets is price comes here, then price wicks takes its liquidity out and taps into the wicks also. However, it still goes up in your favor. And don't forget, it's still within a major order block region, so I wouldn't be too greedy marking out this order block. So let's see how price moves away from this area. Okay, as you can see, moved nicely. And as you can see, it's another market structure shift again. So as you can see, there are some high probability bullish order blocks. Now let's get into some more examples. Okay, so I forwarded it to the actual London time because we want to be taking trades within the session. If you take trades outside your session, there's high chance that you're going to be stopped out and the lower probability setup. So forward it to the London session, as you can see, 2:45. So 3 o'clock is when London starts, and my time set to New York time. So market structure shift has occurred, and it's pretty obvious that market's making high lows. Price is going up, right? You don't need you do need other time to see this, but it's very obvious on the 15-minute. Now, in this leg over here, where is the order block? As you can see, price made movements to the downside over here. Okay, and as you can see, the last 3 consecutive candles before the main move was these 3 over here, right here. Now, why did I choose these 3 and not this whole leg, right? Like I did in this one, for example, over here. Simply because they weren't all consecutive bearish candles. These are the last consecutive bearish candles that caused a liquidity sweep from this low right here, and also caused a market structure shift from this high right here. And this actually ended up breaking the main structure, the main market structure shift high right here. So now, price has broken structure. We're waiting for a retrace back into an order block area right now. So why am I not choosing this order block, for example? As I said before, it's not the last down candle before the up move. Let's see how price treats this one compared to the last 3 consecutive ones. And remember, what we can do is mark out 50% of the bodies, and let's see how price treats that area. So let price play out. Okay, as you can see now, New York times hit, and price moves away, flies away, right? And as you can see, if you left your limits over here and you didn't look at this consecutive candle, the real order block versus the fake order block. So as you can see, the real order block was 3 consecutive candles that caused a liquidity sweep that tapped into another area of demand over here. Remember this order block before? Tapped into this area of demand and then caused a market structure shift overall after making FVG and the market structure shift overall, right? And also, in addition to this, it was created in session, right? It was created in the New York kill zone session. So this was a high probability order block. Why was this not a high probability order block? It was the last down candle before the up move, okay, but was that consecutive? Did it take out liquidity, and was it made in session? No, as you can see, it was made outside of the session, and it doesn't always work. As you can see, yes, okay, here it worked, here the last down candle before the up move worked, here it worked. However, it won't always work. You'll find higher consistency trading the real consecutive order block compared to just one candle trying to chase high risk to reward trades. So let's get into one more example. Okay, so as you can see, I forwarded price to the next London session, and what's happened is price has made a market structure shift from this high. Prior to this market structure shift, has price taken out liquidity? Answer is yes, price took out liquidity with this low. Now, in this leg, right, from the market structure shift to the liquidity sweep over here, where were the next consecutive candles? And if it's hard to find, what you can do, what I recommend, is you scale down just one time frame. So I'm going from the 15-minute to the 5-minute. And you can see the candles a lot clearer. So you can see there was some again like 4 consecutive candles over here before the market structure shift. Now these also caused a mini liquidity sweep, as you can see over here, and this mini market structure shift right here. So as price is going down, see made this mini structure and then broke structure overall, just like I showed in the diagram. Now what you want to do at this point is mark out all the candles over here. So again, the mistake a lot of people will be doing is chasing the high risk reward trades by just going for this last order block, and you'll end up being swerved or just being not tagged in, right? So what you want to do is mark out this area. You could also mark out 50%. However, because we've already refined it from this whole order block, right, this whole area of the move down before the up move, we've already refined it to this area. So I would recommend buying at this point over here instead of always refining it. Then you can go back up a time frame and you can just see how price reacts from this area. Okay, so price tags into this area nicely. Remember the last down candle was like down here, so let's see price tags into that area. As you can see, price runs away nicely. So if you would have entered on the order block, the last down candle order block, the fake lower probability order block, you would have been swerved, market would have run away without you, and the market actually moved after tapping the real order block. So you had the right idea that price was going to go up, however you got swerved, which you don't want to happen. Okay, so as price plays out, you can see there was another shift in market structure over here, and this would have been the last order block right here. However, price did not return to this order block, which is completely fine, okay? Instead, it returned to this FVG right here, which mark this out for you. So it tapped into this FVG over here, this demand area. And remember, I'll be doing other videos on PD raising FVGs specifically, so stay tuned for them. So price tapped into this FVG instead of this order block. Then price has made another shift in market structure. Now, prior to this, right, prior to this market structure shift, where was the last down candles before the up move, right? That were obviously high probability. So as you can see, there's this last down candle over here, right? However, this is a secret hack that I'm sure 90% of you do not know, okay? And it's not about the color of the candle. The secret candle is not about the color of the candle. It's about the actual candle itself and the characteristics of the candle and the candle following it. So we're not going to use this as our order block. Well, you still can as a high probability order block because it's still valid. However, to refine the order block, what you can do is mark out the next candle after it that was engulfed. So as you can see, this order block was not engulfed, right? This order block here was not engulfed right after it. Then the next candle, as you can see, okay, it was a doji, it was a bit of a more of a wick candle, less body. However, the candle straight after it engulfed, right? This also left an FVG in this area right here. Price left an FVG right above it, which makes it a higher probability candle, right? And this is called the institutionally funded candle, the IFC, right? So price tapped into this FVG over here, then immediately engulfed after it. So there's a strong demand area over here. It's a strong support level. So let's see what price does if we retrace. And again, you can mark out 50% of the body right here and just see how price treats that area. So you can see price wicks into that area nicely. If I get rid of this, you can just see it. You can see that secret candle, that IFC candle, being tapped into very nicely, and price immediately moves in the opposite direction, and as you see, it flies away. So that's the secret candle, and I've shown you the higher probability order blocks. So that's it for today's video. If you guys enjoyed this video, drop a comment below and like the video. And also just a reminder, if you're struggling to pass your funded challenge, this automated trading bot will pass the funded challenge for you. You are guaranteed an account. It's a zero risk investment. So if you're not signed up, I don't know what you're waiting for. Places are running out, so if you want to get signed up and you want to get funded instantly, click the link in the first link in the description below to secure your spot, as places are running out. And guys, it's a zero risk investment. If you fail the challenge, you get all your money back guaranteed. However, we've never ever failed the challenge, so you will be funded. There's loads of proof testimonials over here, so you will be funded. Join the Telegram, get funded, and take action. You guys will be making real profits on live accounts trading just these strategies. So again, guys, any video suggestions you want me to do, drop it in the comment section down below. Be sure to share, like, subscribe, and I'll see you next time. Peace.